Street doesn't want to, and the public doesn't understand really what inflation means and what it is. In my view, there are two major symptoms of inflation. Inflation is increase in the quantity of money and of fiscal deficits and so forth. But the principal symptoms are either you have very high consumer price inflation. In other words, the price in your supermarket goes up, or the price of services go up. Like if you want to take a train or you pay for a taxi, the prices of these things go up a lot. Or insurance premiums is a typical consumer price inflation symptoms. Right. Or we have other categories like asset inflation. When stocks go up, properties go up, commodities go up, or house prices go up, and so forth. So these two major categories we have to treat differently. And this is one of the viciousness of inflation, that in the system, when you print money, the money doesn't flow evenly to everybody. It flows unevenly to the banking sector first, and from the banking and insurance sector, it flows on into other sectors of the economy. But what then happens is that occasionally you print money, and the money doesn't boost the asset prices that you would like to boost. In other words, the money could go into, say, coffee or cocoa, like in the last 2 years, or precious metals, or it went in the past into stocks. But as we print money, we don't know for sure whether Nvidia and Tesla will go up, because the money could flow into other sectors of the market. I always say, 4 years ago, who would have foreseen that commercial property prices would collapse as much as they did? You know, this is an unusual scenario that in a money printing environment, suddenly commercial properties in America are down, in some cases by 70%. So these are very important things to focus upon. And my view is that the asset markets in general are peaking out in the United States, and other asset markets, especially in Europe and in emerging economies, or in America, some sectors are depressed relative to the commodity. Oil stocks are cheap, or the mining stocks are low. And as an investor, we need to focus on what will go up and what is not recognized, what is neglected, what nobody wants. That is what I'm looking for. I'm referring to the Magnificent Seven stocks, the FANG stocks, semiconductors, all this AI investment craze. Yes. These stocks are peaking out. I wrote a report, the Trump Top. The report was written in December. In 1989, the Japanese stock market was more than 50% of world stock market capitalization. It then went down precisely for 25 years until like 2003. But during that period of time, a lot of markets went up strongly. And when Japan went down in the 90s, the money flowed out of Japan into emerging economies, notably Latin America, and into the Nasdaq. Nasdaq stocks had a fantastic performance 1990 to 2000. The best 10 years ever. The largest stock market in the world went down and others went up, because the mood was maybe so convinced that Japan was a unique case of overvaluation. But a reason must have been that interest rates continued to decline between basically 1990 and year 2000. And there was plenty of liquidity, because Greenspan was the Fed chairman, and he made sure there was enough liquidity to enrich his bodies. Look, the whole world is gambling on Nvidia and the cryptos and the Tesla stock and so forth. A bubble is always attracting capital from everywhere. You know, even in the tulip mania in Holland in the 18th century, it attracted capital from all over Europe, because the people today are well informed through social media and internet. I know as much as you do about Nvidia and its stock price right now. I happen to have Bloomberg Traveler, but other people, they have other services like Yahoo Finance and so on, and Interactive Brokers, and so they know the codes and they trade these stocks and the commodities or Bitcoins 24 hours a day. Some of my friends who are very well informed, they have argued for the last 20 years that London doesn't have the gold it claims to have, and that there is a shortage, as well as for silver and most likely for platinum as well. And we know that in the last 20, 30 years, the financial markets are much bigger than the global economy nowadays. We can measure that by measuring the market capitalization as a percent of GDP. So when I started to work in 1970, the US stock market capitalization as a percentage of GDP was 25%. Now it's close to 200%. When it was 25%, when the stock market went down or up, it had a little impact, but not a huge impact on the economy. Now, in my view, if the markets go down, they'll have a huge impact on the economy. But that, in my view, will motivate the Trump team, who are all rich people, to support the stock market. They will print money, but then the currency will go. So we will have a lot of volatility. And as I said, my view is you're not going to make money out of assets markets. I mean, not meaningful money. But I think gold and silver and platinum and the food commodities have started to wake up. I think will keep their purchasing power. The problem with Mr. Trump is he's an arrogant, no-knowledge person. He takes decisions without having thinking through the process of the consequences of his decisions very carefully. He's an interventionist. The tariffs, by and large, are a horrible idea. The economists in the 19th century already discovered that it's an unfair tax, so they removed the tariffs in England, which were the Navigation Acts and the Corn Laws, and thousands of import duties on everything. I wrote a thesis about that. That's why I'm interested, and I studied under a character called Heinz Haller. He supplied economic academic background to the value-added tax in Germany, which was introduced by the finance minister Erhard. In taxation, and this was observed by several economists also in Sweden, you have to be very, very careful how to handle it. Because if you impose, say, a sales tax on someone, he may not be the one who pays for it. And Correct. The tax will be on the lower classes in America. That I guarantee you. Everything will become more expensive as a result of tariffs. Now, he may not introduce them because soon he will notice that America may need China more than China needs America. What Mr. Trump doesn't know, at least half of exports from China to America are actually American companies that make goods in China. If General Motors produces auto parts or imports auto parts and there are tariffs on these auto parts, then of course the car in America will become more expensive. Do you want that? He doesn't care. Necessities of life like pharmaceutical products. Yeah, you have a choice. Either you die or you have a colossal headache or you take a pill. You can also move out of the US. But now so many people are moving out of countries that they impose migration taxes. In other words, if you as an American leave America, you come and live in Thailand, you pay tax. Don't ever tell me that governments give a choice to people. They want to enslave people. All the policies that they've implemented is to restrict the freedom of people. And most people are not interested in freedom. They're interested in a free lunch. And that's why our systems have become corrupt and the freedom of movement of people and economic growth has deteriorated. Don't tell me the US is growing rapidly, because if the debt grows by, say, $10 trillion in 8 years under Biden, and the economy is growing only at, say, by $3 trillion, where is the growth? But the government lies about inflation. I'm telling you, don't ever believe a single word of what the government is telling you. We had until early 80s systems of socialism and communism and planning economies in large number of countries of the world, in the majority of the population of the world. Then the open door policy of Deng Xiaoping in 1978, and then Berlin Wall fell in 89. And Vietnam also began to open up and adopt market economy principles. And what has happened since then? all the standards of living of countries that had socialism and communism and now have a market economy and capitalism, they have improved. The standards of living of everybody in China has gone up. And what have happened to the standards of living of countries like the Western European countries in America that gradually had this creeping cancer of socialism into their free market economies? The standards of living of the typical people, not the people who are in Newport Beach and in Palm Beach and so forth in the rich areas, but the typical American standard of living has been going down because his salary is going up less than his cost of living. And this is a fact that Wall Street doesn't tell to the public because they want to induce the public to buy stocks from which they benefit. Wall Street and the group around Wall Street, the lawyers, the accountants, the private equity managers, and Trump himself, they all benefit from asset inflation, from prices going up for assets. The large banks in Asia are still the Japanese banks, Singapore and Hong Kong. In general, I have a positive view of these banks, but bear in mind that in Singapore, the banks have gone up a lot in price already in the last 18 months. I'm mentioning this because everybody in the world was so negative about the emerging markets and about China and so forth. And yet the banks in Malaysia have performed very well because they were very cheap before. So I like to buy things that are cheap and then wait until it becomes fashionable. I think the Thai banks are reasonably priced. It's clear to me that selected US assets are very highly priced and the expectations for these companies are very high. And when expectations are very high and the stock price is very pricey, there is plenty of disappointments that can creep up. And so I would avoid the Magnificent Seven stocks and the semiconductors and anything that is popular. And I would look at sectors and industries that are not popular and depressed and have a value character. Low price book, low price to sales and so forth. That is what I would do. And that you find in emerging economies. Last year, one of the best performing markets in the world, the best performing country ETF was Argentina. 2 years ago, nobody wanted to look at it. 2023, one of the best performing markets was Turkey. I think Latin American markets and some Asian markets are reasonably cheap. They're not as cheap as they were in 2003 and 2009 during the crises, but they are relatively cheap.